Okay, just pulled up to Brooke Gagliardi's office here at her Central Bank location on May Avenue in Oklahoma City. So we're going to run in and go sit down and have a chat about what's going on in the mortgage space. So again, welcome to Realtors and Rides. As I've done on a couple of episodes, I reached out to some of my partners that I have, and this is Brooke Gagliardi with Central Bank here in Oklahoma City. Done a few deals with you, and the last one was interesting.
Fun.
And again, that's why we have our trusted partners. Not only do you have a choice from who we know can get the job done, but we also believe in what the process is with each one of them. So
I agree with you. Having that direct contact, somebody who's going to answer their cell phone at 9:00 at night or respond to an email, that's super helpful. You're not getting a customer service line. You're not getting passed around. You're getting that direct contact and getting the answers you need as quick as possible.
Exactly. So kind of walk us through what's it look like from your perspective when you have somebody come in that say is a first-time buyer, or I'm sure you've got loan programs that certain professions qualify for. Yep. So what are kind of some of those that
absolutely
that are top of mind and up there?
Yeah, so that's what's really cool about working for a bank as opposed to kind of I don't like to call them this, but kind of a big box lender, right? So a lot of them have to fit in a very specific box. As a bank, we can get a little creative with our financing and hold things on our books and what we call a portfolio loan. So for instance, for our first-time homebuyers, we have a 0 down, and then it requires no mortgage insurance. And for those of you that don't know what mortgage insurance is, if you ever put less than 20% down on a home, you would be required to pay a monthly payment called mortgage insurance that protects the lender should you ever default. So I think it's just really helpful. That's a good monthly savings and bringing 0 down for the down payment. And then we have our service hero loan. So we need firefighters, policemen, teachers. We do 0 down for them as well, no MI. And then we do that for our medical and professionals. So doctors, residents, fellows, lawyers, engineers, and professors. So all of those, don't ever hesitate. I know that was a list. But obviously, my whole point to that is we're giving all of these people an option to do a 0 down, no mortgage insurance, knowing that they probably carry a little bit of more student debt, that type of thing. So it gives everybody some options. We want to kind of touch the community where it's needed.
Okay. So what's your application process look like? What's usual turnaround time for the decision? And then what does a closing time frame look like?
Great question. So application process can happen a couple of different ways. We just have our online, a link that you can go on, and I can a lot of times the agent will circle me in on a group text so that we all have that communication there, or they can go onto my website and it can be done there. So when they start that process, it's going to ask them, the basis. And I tell people, do not turn the application into homework. Skip parts you don't know. I mean, it is my job to thoroughly review that. So I can always circle back with questions. Okay. So basics, income, personal information, that type of thing so that I can get a gist of the big picture that I'm going to be painting. And then once I receive that, I try to review every application same day. I try to have a response that same day, but ultimately it's going to depend on the applicant, right? Yep. The borrower has to get me what I need. I don't like to do just pre-quals. I don't want to trust what's on the application ever. Sure. I think many lenders feel the same way. Agents prefer that as well. Yep. We all want to make sure we're secure in the transaction. So I let the client know up front. There's going to be a portal at the end that you can upload W-2s, tax returns, pay stubs, whatever the case might be, based on what they put on the application. But I'll need those before I can make any decision. Sure. If they have those to me as soon as they submit the app, then I will have an answer to them within hours, right? Or not even that long, just depending on when the flow of that day is. But always have an update an answer or an update by the end of the day.
So. For somebody who might not have purchased a house recently. Right. A lot of it is stemming from the 2008, 2009
Correct.
crisis.
Yep, those subprimes.
Yeah, so the days of writing down your income on a napkin and throwing it across the table is out. So the difference between a pre-qualification versus a pre-approval,
So if we're going to be real technical. So
let's get there.
Yes. So a lot of people will say, hey, here's your pre-approval letter. Truly a pre-approval has gone through underwriting. I mean, if we're going to be super technical, I think most lenders would agree. If you were writing an actual pre-approval letter, that means that everybody has had eyes on income. It's verified. We are good. It's pre-approved.
Right.
Pre-qual is more commonly known as they just entered what they entered. You're taking their word for it. And you can see some of the difference on some of these letters. For instance, when I send my letters out, I always say that I've reviewed credit report, income, everything that needs to be reviewed to give a solid approval. I put that in the letter.
Okay.
Some of the bigger lender, online lenders would just say, here's your loan amount and it's been reviewed. I mean, they're going to be more broad about how they're explaining. So I think personally what I like to do, and I know my fellow loan officers, we always just want to make sure that we've notated mainly for the agents to say, yes, I've had eyes on it. I feel solid about it. Ultimately, it still always has to go through underwriting. It's still, snags can come up. It happened. For instance, just like you said, a lot of times people will just send me their W-2s and then they have this side gig with Schedule C income. And not to get in the weeds of it, but if they're showing some kind of a loss and that comes up in my world, I wouldn't have known unless I saw their tax return. So It's just people, I always tell people, I know they are almost scared to tell me things and be transparent and honest, but I assure you, I am here to help you get it done.
So that was kind of the biggest thing too, is looking at the difference between the two. Because obviously, anybody thinks, well, I talked to my lender, I got this letter. Well, there's a whole world of difference. And then when you get into it as well, you can also see where things fall apart at the last minute.
Absolutely.
Because there was something that wasn't told or something that they thought was clear that wasn't cleared. So
And not to, but I think relationships in this industry are really important, right? So not speaking so much to the client or the borrower at this point, but just saying like when you're working with a trusted lender and a trusted referral partner, as you mentioned, that's so important because if you have an issue that comes up on some of the deals that we've had, or I can say, Mark, this is what I'm working on, but I'm going to get it done, and we're going to get it. So that's kind of the thing. It's just having that trusted conversation to know their products, right? So, for instance, this morning I have a deal where they were thinking about maybe going VA, right?
Yep.
Well, VA has to be your primary residence. Veteran has to live in the home. Certain things. Anyway, all that to say, we have a standard portfolio loan. Whereas a primary residence, you only have to put 10% down and you're not required to have mortgage insurance. And we're going to have a little bit more leniency on that veteran making his transfer to Oklahoma, right? We're not going to be sitting here watching our time. Did you get a pay stub? Do we have, right? We can say you've got 60 days to occupy this home as your primary residence. We need to see that transfer is in place. So there was just some creativity that we could do as a bank and trust the client. And, ultimately it's on our books and it's our responsibility.
Right.
So I think that's great. So that's another thing is if an agent calls me and is like, they can't get it done, we have that relationship where like, let me dive in, let me see what I can do.
Sure.
So I think it's great.
Yeah. And so kind of on those lines, so I've seen, I'm sure you've seen the same things on TikTok, social media, and everything else, where you have, an industry expert that says, well, all these homeowners don't know this. You do need to go put multiple applications in at different banks, different mortgage companies. Absolutely go out and shop it and go see it. Now, the hesitation that I have gotten has been, well, I don't want my credit dinged. So
let's talk on that.
Let's talk on that. Let's talk about credit ding and
I'm not going to put specific dates, but I'm going to give everybody a little bit of advice. So 2 things I actually want to touch on this topic if I can. So one, I will say the very first thing I want to touch on is when you apply with a lender, right? There is what we call trigger leads. And I just want to warn everybody right now because it's a real thing. We do not sell your information. Ever, ever, ever. There's ways we can kind of alleviate some of these trigger leads, but I just feel like it's a fair warning that if you are even thinking about starting to shop for a home or just for the heck of it to not be on a call list or go shop for anything else, it's optoutprescreen.com and you can remove yourself for 5 years from those trigger lead calls. I think it's the best thing you can do. I've done it personally. I'm not shopping for a home. Just, So I just want to warn people because when you go to apply, obviously it hits all 3 bureaus. We're doing what we call a tri-merge. And with that, the bureaus then alert that you're shopping for a mortgage.
Right. So then that
so
brings
then
in
you're
the flood,
inundated.
all the stuff.
Exactly.
Yep.
Now, with that being said, I always tell people, will you take a small tick to your credit when you apply? Yes, because it is a hard inquiry when we pull your credit.
Right.
The first lender to pull your credit is a hard inquiry. You then have time to shop rates. So they tick that it is a mortgage inquiry. They recognize that, the bureaus do, and they allow you a time frame to shop for that home without it continuing to deem your credit.
Gotcha.
So I know people who have gone out to shop for a car, right? We've all been there.
Oh, yeah.
And you get like 16 inquiries and you're just going, oh my gosh. So it's not going to have that kind of an impact. And I also tell people that first hit, it is a tick, and you're going to have that it reports for, that you have a hard inquiry on your report. But as long as you're not getting a car and a house and a credit card and you're just constantly hitting that hard inquiry over and over, that just the mortgage inquiry should have a very minimal impact, and you will begin to recover immediately from that.
Right.
So as long as you stay consistent with your online, or if you pay them online, with your payments and keeping everything in check, then everything else, your score will literally rebound in no time.
Right.
On the same topic, let's talk about apps that you use for credit.
Yep.
So Credit Karma, those Experian. So many people will be like, well, it's Experian. It is the bureau. And they're telling me my score is this.
Well,
I always tell people it is an amazing tool.
Yep.
It is to prevent identity theft and keep you aware of where your score approximately is. If you make a payment, it takes anywhere from 30 to 60 days to that reflect to the actual bureaus. So when Credit Karma throws all this confetti that you just made your payment early, it's recognized it, it's triggering that, but it's not actually reporting that immediately.
Right.
So I just want to tell people, they call me and they're like, well, Brooke, my Credit Karma score says it's a 780.
Right.
And you're telling me it's a 740. It is a tool and it is a resource, but there are a million matrices and Vantage score, things of that nature. Lenders have to do a very comprehensive review of credit reports. So we're getting all the details. So just thought I should touch on that,
and so
because I get a lot of that.
It's kind of along the lines of a Zestimate. So I like to quote the former CEO of Zillow that says, hey, we're just guessing here. To get a real value, you need to contact a real estate agent.
That's exactly right.
So same thing with the Credit Karma. It is, that might be your raw score.
Right.
But you guys, as well as anybody else, is going to have an internal scoring sheet, basically, to kind of simplify it.
Exactly.
And so depending on what other debts you have, incomes, anything else, it's going to knock that score down. So just because, like you said, well, credit says I'm 790, but you said I'm 725.
Right.
Well, after we score it for our use, then yes, that's where that goes.
Exactly.
So, and kind of on the same thing too. This is also a joke that kind of floats around in the real estate world. Is you see, a picture of a brand new car that pulls up to closing, and you see the agent just losing their mind because they're like, okay, well, that deal's dead. So let's talk about what you're not supposed to do.
Just rolled up in a BMW.
Yeah,
we have a
what
problem.
are you not supposed to do after you've got a pre-qualification? We're going down the road. We're closing date set. Everything's done, and all we're doing is just waiting for everybody to say, get in here and sign stuff.
What we're doing is, when I do a pre-qualification or a pre-approval, we've pulled credit, we've viewed income, all of that. That is in place for your approval. That is, we are working off real numbers for what was submitted and reviewed. If you quit your job, we've now lost income, so please don't quit your job. If you're going to transfer positions and get a raise or a demotion, we need to know any detail as far as employment goes, because I have created my approval based on the income that was input and reviewed.
Right.
Credit-wise, everybody gets super excited about a new house, right? So within weeks, we're like at Lowe's or Home Depot or the furniture store, and we're wanting to rack up all these credit cards or open a new line of credit to finance our new appliances or our new furniture. That is an issue on our end. Right, changes the client's debt to income ratio. So that's a huge problem. And I mean, a lot of times what I think people don't understand is, if I send you an approval, I'm saying, you're qualified up to this amount. You could literally that's your high end, right? So we could be this far from just being not qualifying. So I think, and I really, as a lender, try to have that conversation with people. This is your very tip top end. I do not recommend going here, but just so we're having the conversation. But that's another piece of it, is you don't want to finance anything new. You don't want to quit your job. Honestly, another one that I'd really like to touch on that I don't think a lot of people think about, but honestly, this happened on our transaction, is movement of money. So people will have 5, 6, 7 checking accounts and
Yes.
savings accounts and CDs and, and I get that you want your money in place but our job is to kind of delegate, like, okay, we've got savings here, we've got checking here, we've got a retirement account.
Yep.
If you start just moving all this money, we've got large deposits that have to be documented. We have, funds being withdrawn now, we're short funds. We have, so not to say you can't live and eat. That is not my intention
Right.
at all. You are allowed to spend your own money, but it is imperative that, because you will have to paper trail every bit of that movement so that I can see where the money came from, where it went to. So really, I'm only saying that to alleviate the legwork on the client side. We are literally, because of how you mentioned 2008, making sure that there's not any unexplainable money movement, right? We don't want any money laundering. That's all we're trying to. So large deposits, all of that, we're just keeping an eye. So I don't want people to think I'm just in their bank statement going through to see where they spend all their money.
Exactly.
I do not care. It's none of my business. I just have to track what I have to track.
Yep. So we kind of got to talking about real estate a little bit, and of course she said, "Well, I bet you it's all those all the marijuana grows that are out paying cash for houses." Of course, I laughed. I'm like, no. It's got to be in the bank at least 60 days. We got to prove where it came from. It can't be touched or moved. So they're not just showing up at the title company with a briefcase like you see in the movies going, "I'll take one."
That's exactly right.
No.
That's a great point. Season funds. I've run into that before. People will call me and be like, "Oh, I have money in the safe. It's been there. I'm not a bank guy. I've never, Well, you're about to become a bank guy.
You are for the next 30
you want a
days.
house, yep. So that was a good touch mark, because that is, we do need 60 days season funds for any deposits, that we're going to be utilizing for the funds to buy the house. So.
Exactly. And it's, it could be a small amount. It could be just any amount. So we got to be in there. We got to see if you want to use it for this in any way, shape, form, or fashion, we've got to get it at the bank and it's got to go. Although, as I've said, I'm not licensed to talk about rates, but I do have an app that Mortgage Daily News. So I went down a little over a quarter yesterday. So
we are seeing major improvement. Also, to that, the feds did announce that they would be doing maybe I think 3 cuts. So the median dot came in. They were projecting, I think, 5.1. It's 4.6. So, we just got some really excellent news. And Powell was very dovish, meaning he wasn't dovish hawkish, so obviously dovish is a good thing. So as inflation comes down, as many of you know, rates will come down. So as long as we can stay on that trajectory, I think we see good things for 2024. I'm super. Just our world of knowledge now, right? Because 80s, 90s, we didn't have social media. We didn't have, there is so much information readily available. And I kind of touch on that. I think that that's really difficult too, because I think a lot of times, so I'll see a social media post that says, "Hey, you don't need 20% down for a down payment. You can do as low as 3, or some cases 0." It just depends on the lender, that type of thing. And when you're watching these, I'm like, "Hey, that's great," because and you start to think, well, don't people kind of know that now? But then I started thinking, I'm like, there is so much out on social media and internet, and it's almost like we've saturated, right? And so, what do you believe? So that's why having a trusted agent, a trusted lender, somebody who's giving you real confirmation, real facts. So, if some person's just driving around telling you the rate's 8.5%, just don't take their word for it. I think it's worth picking up the phone to call, or shooting somebody to email to say, "Hey, I don't want to apply right this second, but where do we kind of land here?" I'm never opposed to somebody reaching out to have real factual, what are your rates sitting at today?
What is it? How do I get there?
Exactly.
Well, and that's where I've posted several times on social as I'm seeing that rate dive. I'm like, okay, I'm not licensed. I can't tell you, but here's a link to an app. Go download it, and it'll tell you what the average nationwide is.
Exactly.
Now, of course, I think that average was 6.8 last night. Again, off the app. I'm not quoting anything. But even your rates are less than that on certain.
It just depends on the product.
Credit. So it's not necessarily where it is.
Exactly.
That's where we got to get in and look at the credit.
And I'll ask those I can do a very broad overview of, a high overview of what they're thinking. So if a veteran calls me and they're like, "Hey, I can go VA. If I was to go VA today, what does my rate look like?" Do you have a ballpark what your score is? Pull up your Credit Karma, because that'll give you a ballpark.
Tell us.
So then I can take that information and say, okay, if you were to go with this product, it'd be a little bit higher. But since you're VA, it's coming in at 6.5 today, or whatever the case might be. But And that's just the conversation. It's a conversation starter. I tell people all the time, just because you pick up the phone and call me, I am not going to harass you and obligate you to fill out an application right then. I understand it takes conversations, it takes trust. You have to build to get there, and I completely get that. I would never pressure somebody to the point of, so that's kind of my biggest pitch, if I can give one, is everybody thinks we're big, bad, and scary, and I say it all the time, we're not. I want to help. And if I can figure out how to get real creative, and we can get it done together. There's down payment assistance, there's programs, there's first-time home buyer programs. There's so many options.
So you guys do obviously conventional FHA, VA,
and USDA.
USDA.
Mm-hmm.
You deal with the 184 native.
We do. We have the HUD 184. So we have all of those kind of box products. My favorite thing to do in the world is to basically show you a summary of anything you qualify for. So if we can go HUD 184 or USDA or whatever, I want you to see all of your options, and then we determine based on the client's short and long-term goals what makes the most sense.
Right.
What's more important? Is your monthly payment more important? Is coming to the table with this much more important? Where do we fall? And let's have those conversations.
Yeah.
So,
okay. So anything? We kind of touched on all of it.
I think the biggest piece of it for me, because like I said, I deal with first-time home buyers a lot. I just don't want that intimidation factor to be there. And not just me personally, I think so many lenders, we just want to help. I mean, we're here to help. And again, no obligation to move forward, right? I could work on your file for 3 days. And if you decide, Brooke, I can't do this, great. I mean, that's fine. I want what's best for you always. So, and again, the honesty and transparency, I think between all of us, right?
Yeah.
With your agent, with me, with us, it's all of us are involved. All of us are putting all of our heart and soul and time into it.
Yep.
It's only fair that we're honest with each other and we're having that communication. Communication is vital. I mean, in life, but in this industry, it's so important just because we all want the same end game. Yep. We want it to work. We want you in that home. So I think that's the most important, kind of takeaway.
Okay.
Yep.
Well, cool. Well, if anybody needs to contact Brooke, obviously I've got her information down below.
Perfect.
And of course, it's out on my website as well.
Yep.
I've got all my trusted partners are out there.
Perfect.
So thanks for watching, and hope this was helpful. And then we will see you on the next episode. Brooke?
Awesome. Always a pleasure, Mark.
All right.
Appreciate you.
Thanks.
Thanks.
See you guys.